Friday, February 12th, 2021, Monaco 64, home of alternative economics and contrarian views. There's a lot to talk about. And before I start, I like to thank all the new subscribers, all the new viewers for their interest in my channel. I've gotten above 40,000. I would never have expected that 5 years ago when I started my channel. But for some of those, for some of you out there who are thinking of starting maybe a channel, the advice I would give, and I can give advice on that, is to stick to it, to do something, to talk about something that you really interested in, something that you have kind of an obsession for. And I don't think being obsessed about things is a bad thing. So that's the advice I give, and stick to it. Yeah, don't just do a video and then stop for a week or two. You got to stay at it. But yes, a lot to talk about today. I'm going to try to focus on hyperinflation. I think all the ingredients for hyperinflation are there and all the symptoms are showing. And that's what I'm going to cover today broadly. And I'm going to refer back to all the research I've done over 20 years, to all the experts that I've listened to. And by experts, I don't mean the mainstream economics people, but more on the alternative side, on the free market side. Before I start, though, I like to say there's a very good interview that Chris Marcus did with Bo Pony. So Bo Pony contacted Chris Marcus to interview him about the situation in silver and the whole monetary system. And yeah, Chris Marcus published that on his channel, YouTube channel, Arcadia Economics. I assume it's going to be also on Bo Pony's channel, Gold 2020. And one of the things that Bo Pony said, which I'm familiar with, is that when Nixon closed the gold window, he said that he was going to temporarily block the convertibility of the dollar into gold. Temporarily, he said. Yes, we know that politicians have a habit of doing things temporarily and then keeping it forever, like the income tax back after the Napoleonic Wars in the UK. That came about and they said it was going to be a temporary tax to pay for the war, and we still have it today, 200 years later. But yeah, I don't think, though, with a fiat currency, things can go on forever. And I think we're very close to the temporary and to the temporary ending. And I think gold and silver are going to be the barometer. They're going to expose the system. They're going to show that the Fed has no clothes, so to speak. Silver, yes, a lot of people think silver is not as important as gold, but I think they're both very important. And they showed that in 1980. Silver especially almost brought the Federal Reserve to its knees. It was so bad. And it's not just about the Hunt brothers. It was even a year or two before that, the U.S. Treasury had to issue Carter bonds. What are Carter bonds? Well, they're named after President Carter. And it was the only time that the U.S. Treasury had to borrow in foreign currencies because the dollar was so out of favor. So it was more than just the Hunt brothers and the squeeze on silver back then. It was the existence of the Federal Reserve that was at stake. But at the time, they had been able to deflate the debt with the stagflation of the 70s, 60s, and 70s. And the national debt was only around 32%. So Paul Volcker was able to save the Federal Reserve, and I don't even mean the dollar. It's a Federal Reserve note, because we all know that really, in reality, a dollar is this here silver dollar, and also a weight of gold. The act. The Coinage Act of 1792 is not just about silver, but also about gold. So yes, this is about 0.77 of an ounce, 371 and a quarter grains. That's the dollar. That was the original weight at the 1792 Coinage Act. They did change the weight over the years, but that's the original weight. So yeah, it was more protecting the central banking scheme that the Federal Reserve is. And he succeeded because he let rates go up to 20%. But they can't do that this time. So right now they're fighting tooth and nail to keep the barometer, the revealer of true wealth. That's gold and silver. They reveal what true wealth is. Right now, we have confetti as the currency, aka the Federal Reserve note, or the paper dollar, if you want to call it. And that's where we come to hyperinflation. What are the ingredients for hyperinflation? Well, if you look back at France, back in the 1790s, you need to have social unrest, political unrest, the state going bankrupt or having a lot of debt, economic stagnation, people speculating instead of producing or growing crops to live off, the morals going down the tubes. And I'm not trying to be a preacher here, but look at everything that's going on today, and so that was happening in 1790s France. They chopped the King Louis the 16th and Marie Antoinette's heads off. The Reign of Terror. They try to solve the problem of economic stagnation and unemployment through paper money. Yes, they were very reluctant to issue the paper money. The French National Assembly was very reluctant, but eventually they did it. They said it's going to be a one-off, the assignats, and once the economy picks up, we will kickstart the economy. I don't know if they used that term back then. And they said, well, once we kickstart the economy, we can withdraw that paper money, because it was something revolutionary almost, pun intended, back then. And go back to they were hoping that the specie would come out and circulate. But people had no confidence, and by specie I mean gold and silver coinage. People had no confidence in the political system, no confidence in the economy. Farmers didn't have confidence in the assignats, so they held off their produce. They didn't want to sell their crops because they also put price controls. That's the other thing that happens. Governments try to basically neutralize the effects of their own policies. And we're seeing that today through the precious metals. They've been putting price controls on gold and silver since 1971, really, because gold and silver prior to 1971, they were money. So you have to keep those money, the real money, from playing the role of being a barometer for the fraudulent nature of the paper. And the other thing they had to do back in 1975, when they legalized gold again, monetary gold in the US, they created the futures market, not the futures market, sorry. They created the gold or GC, the gold contract on COMEX. They already had a silver contract. So they created GC on December 31st, 1974, the day before they let Americans actually buy and sell gold. They didn't trust Americans. They still don't trust the public, not just in America, but everywhere around the world. They're very, very concerned that people get into the real thing, physical gold and silver. So they've been manipulating the markets through the futures, which is a paper market. And ETFs are just, how can I say, a second step to the manipulation. They had to bring ETFs on board back around 2004 or 5 in the gold. I'm not sure when the silver ETF started, because there was so much interest by all investors in gold and silver. 1975 there was, but they hadn't come up with ETFs yet. So ETFs, futures, they're just ways to keep the investment public from acquiring real physical gold and silver. And that's why I've been telling people that you need to buy physical gold and silver. I think there's one ETF out there that is physical, PSLV, but I still say, nothing beats holding that. And I know that silver is bulky, but yeah, when you're talking about your financial survival, not only your financial survival, but maybe your children and grandchildren's financial survival, I think it warrants doing, not being lazy and doing the thing that's the easiest. You need to try to get a hold of physical. Yes, do I know when this is going to play out? When gold and silver are going to expose the Federal Reserve and the fact that the Fed has no clothes? I don't. But as I've worked in the markets for over 20 years, I worked in the financial markets. So yeah, I was in this game, in the paper game, and I learned a lot about technical analysis. I really enjoyed technical analysis, fundamentals as well. Some people just focused on technicals or just fundamentals. I like to have a feel for both. I always had an opinion on the fundamentals. Fundamentals are like when you look at the economy, the macro view of things, geopolitics, monetary policy, fiscal policy, and technicals is when you just look at the charts of the instruments that you're trading. And I have to say, I've learned through the years from people like Jim Sinclair about technical analysis as well, about chart formations. He's talked before about the Swiss step, which is like when a market's going up and it does little steps. That's a Swiss step. He's talked about the French curves, the parabolic moves, but the most interesting one is the teacup formation. And I think the teacup formation, I had a word with Tavi Costa of Crest Capital. I interviewed him some months ago last year. And we were talking about technical formations. And he was saying that he thinks these technical formations are a picture of something that's happening underneath the surface. And I agree with him. And I think the teacup is like and even Bo Pony and Chris Marcus were talking about that in their interview. And I've showed you this one before, the teacup in silver, like a 45, 50-year teacup. It's a sign that the price has been suppressed for decades, a couple of generations almost. And what's the resolution of the teacup? Well, it's that we form the handle on the right-hand side here. And once we break the handle and we break the top of the teacup, we'll go through the roof, the price. And usually the objective is the depth of the cup. So if you take roughly the low there in the 80s, 90s there in silver was around $3 or $3.50, and the top at $50, because we topped in 1980 at 50, roughly at 50, and roughly at 50 in 2011. So do you extrapolate the nominal amount? I don't think so, because it's been manipulated for so long that this is a logarithmic chart, so it's a percentage chart. So I think you have to extrapolate percentage-wise where silver will go. Normally people will say, well, $3.50 to 50, that's 46.5. So if we break 50, we're going to go to 96.5 or 100. I would say that we need to extrapolate the percentage move, and that takes silver into like in the hundreds of dollars, maybe 500, 600. When that will happen, I don't know, but these charts are here to tell us that. So the key level, I hear a lot of people, silver is going to go to 50. That's our objective. For me, it's just the beginning, 50 for silver. And maybe this chart also makes you think differently about what's going on right now in the short term with the price, not only of the silver, but gold. As you can see, this is a monthly chart. It's still looking very good. And we're still forming or almost breaking out of the flag or triangle formation we've been forming since March last year when we had a bottom around $11. So now we've got the consolidation, and you can see we're breaking out of the flag, and the next level is 30. That's why that 30 level is so important. Once it breaks 30, I think we'll be up to 50 in a very short order. And again, I don't know the timing. We can try to look at these formations, but it's very difficult sometimes to do the timing. But I think the direction, and I don't want to be, nothing is ever certain in life, but it looks very, very good in terms of gold and silver, and very bad, unfortunately, for the fiat currencies. And I think it's going to make what we're going through right now since last year, it's going to be almost like a picnic, unfortunately, for many people. Our politicians, our economists, our central bankers, they're basically trying to cover things up. Like here in the UK, they're telling us that unemployment is still like 4.5%, even though I think there's 9 million people that are in furlough. So when all these schemes end, the tide's gonna go out, and no one's gonna be wearing anything, and it's gonna be really bad. I think the economic depression. You listen to the economists on Wall Street, Jay Powell, the Fed, all the Janet Yellen. Oh, we're gonna make everything come back. Like the French did back in the 1790s. We're gonna just kickstart the economy, another stimulus, and they're never gonna be able to stop. And those are the symptoms of hyperinflation. And that will happen. Because people are going to lose faith and confidence in the currency. The same thing happened in Weimar Germany after the war. So they had a huge crisis, World War I, a lot of debt, reparations, political upheaval. The Kaiser had abdicated. Germany was in mayhem in terms of politics, socially. People were speculating as well, the morals. And I think we're approaching that. And a lot of people also think that you can only have hyperinflation when the economy is strong, but it's not. It's when you have a stagnant, deflationary, depressionary environment with loads of debt and fiscal stimulus, political upheaval, political unrest, speculation, GameStop, Robinhood. So I think that's where we're at. And yes, I've been blessed, I guess, to be able to look at the charts and the fundamentals, because it's hard. It's hard to know when these things are not going to happen. And there's a book here by Franz Pick, The Triumph of Gold. He wrote that back in 1986. And he was talking about that already. And in the foreword, his friend Dr. Henry Jarecki says that Franz Pick didn't really predict that. He said, I'm not predicting, I'm just looking at the behavior of our leaders, and just to see that things cannot go on as they have been going on in terms of the monetary situation, economic debt situation. And this is what he says here about what Franz Pick told him, Dr. Henry Jarecki. He says in the introduction, but those predictions were not, when one knew him, predictions at all. They were rather the words of Hosea declaring that the children of Sodom and Gomorrah were behaving badly and would thus come to no good. They were not, any more than Hosea's words were, practical guideposts. Not at all. He knew no more about when gold or currencies would go up or down than anyone else can in this random world. So there you go. I think, yes, the loss of confidence in the currency is coming soon. Hard to say when. Loss of confidence, of course, means that nobody wants the currencies anymore. And what that does, the demand for the currency drops through the floor. And demand for anything but the currency goes through the roof, and that's when you get the hyperinflation, the loss of confidence in the currency. No one accepts it anymore, and I think people are going to be shocked at that, and I think we're getting closer and closer. So with that, let's look at where the markets are this morning. And of course, we look at the short-term moves in the price, in the fiat price of gold and silver. Yes, it has been frustrating, but one thing I would say is that right now it looks like silver is outperforming gold, and the gold-silver ratio is actually dropping. And I think what they're trying to do now is because they're having a tough time with silver, the bullion banks, so they can't drive it down any further, so they're trying to chip away at gold, but I don't think they're going to succeed either, of course. So right now we've got spot gold at 1817. It's down about $8. No reason for gold to have been down overnight. Some people say it's the Chinese New Year, but they always come with that. People always talk about that. I'm not too sure about that. I think it's just the bullion banks chipping away at it. You could see it yesterday. They didn't smash it yesterday. Maybe they try not to be too blatant, but they just chipped away at gold all day, all day. It's like clockwork sometimes. So yeah, down 8. High's been 1828. The low's been 1812. It is just after 9 a.m. London. Spot silver 26.95. It's down only a cent. So outperforming gold, which is a good sign. The Dow futures down 86, NASDAQ 100 is down 35, S&P is down 12. The fiat currencies, the pound is down 0.25%, 137.84. The euro is down 0.2 at 121.07. The dollar is a little stronger versus the yen, 0.33%, 105.04. And the dollar is up 0.25% versus the yuan at 6.43. Yeah, again, the movement amongst the fiat currencies is just distraction. None of them will survive when we have the hyperinflation. It's not just a dollar that's going to go. Don't forget, all the other fiat currencies are a derivation of the dollar. If you go back to the Bretton Woods system, 1944 thereabouts, the dollar was at the center, and it still is, and that's why a lot of other currencies and countries have dollar reserves. That's what backs their currency. So if their reserves are going to go to zero, their currencies are going to go to zero. That's what you need to remember. What about copper? Copper is down a bit, down about 1%. WTI as well is down 1.3%. So we're seeing the commodities come off a little bit here. I think the commodities, as I talked with Rafi yesterday, I did a live stream with him yesterday afternoon. If you haven't seen it, I recommend you do. We touched upon the commodities. We're just beginning, I think, to see a bull market in commodities. And that's synonymous with currencies going down. So what about the 10-year yield to finish off? Well, we're at 115, so pretty much unchanged. The 30-year is still below 2% at 194. Yes, will the Fed be able to control yields if the dollar goes down the tubes? It will be hard, I think. Most people think that they can keep printing and doing QE, and I've said that they probably will try that, but it's going to be really interesting. So you should hopefully be prepared by now if you've been stacking silver and maybe some gold over the years. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great Friday and a great weekend. Take care. Bye.